Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
Doing pretty well, doing pretty well. It's a pretty active week, all
It was,
awake.
yeah, we got a lot of good markets running. We saw commodities move. We saw the S&P, NASDAQ,
Grains.
grains had a really, really nice week. So means we had a nice week. But anyway, we're going to cover that and much more. We'll on my segment, we're going to do wheat, corn, soybeans, coffee, and natural gas. And Barry's segments, he's got the big five that we cover each week, and sort of it's an ongoing saga, a new chapter every week. So we've got the S&P, bonds, gold, crude, copper, the dollar, and the euro. So it's a full plate. Let's dive in so we can get right to the charts. Bitcoin is one of the things we start off with, and it's been exquisitely boring the last 2 or 3 months. It's sort of this slow drift down.
Mm-hmm.
And then today we had one of the biggest bars we've had in a couple of weeks, pushing to the upside, although all still within this triangle, and even zooming in, still within this half square that we've been stuck in since March. Right. So nothing's changed on the bottom side. The half squares is support, and that's around, by the way, all these levels are posted on a Google Doc spreadsheet, which we'll send the link out when we send the link to the weekly show. So the bottom of the Bitcoin, that half square is around 24,400. And at the upside, you're looking at about 28,900. So until we sort of take out either side and clear it, you can basically just expect more of this gobbledygook that we've seen for the last few months. Anything else to add in there, Barrie? There's not a lot of wisdom you can add when something's just drifting, but you got any other thoughts?
Well, it was drifting lower.
Mm-hmm.
And I think it's very close to support. We caught the lower trend line, more or less. We were there. And now I think the squeeze is on. So clearly we're going to hit one of these lines next week.
Yeah. Yep.
And we're kind of fighting, but we're fighting on the lower end of it. So we really have to watch that lower trend line. I think that's the key.
Yeah, this line here.
Yeah, that line. I think if we hold that, then maybe we can go back and check above a little bit. But if we don't hold it, I think the downside could be big. I think this is one of those critical points, at least on my charts, and yours too, because you're at a timeline and you have perfectly between squares and a 50%. So my take is if the 50% on the lower side goes along with the lower trend line, then I think we could expect a larger move. Because of your scale, it's a little bit hard to tell, but we've been doing very consistent lower lows, lower highs.
Yes.
Right. So
in a drift, but it's definitely lower low and lower highs.
So I think in a couple of months. So at this point, if it can't really pull above and we have these trend lines coming into play, I think we could expect something big if especially if the lower goes.
Yeah.
Yep. So
this lower trend line is really important support.
Really, and that's why you have it bold.
Yep. Yeah, we'll see how it goes. Let me throw it over to you. I'm anxious to jump in because we did see a lot of movements and we got a lot of timing coming up. So let's see what happens, what we got. Oh, there it is. There's the breakout.
And then some.
Yeah, I mean, look at just brilliant, man. Look at how that for 4 or 5 days we were hugging the line and then boom, picked a direction and just went.
All right. And it was right there at the 90-degree line.
Yep.
Exactly where we're expecting some kind of a decision, like you say, a decision point, right?
And a decision point in time too. Look at because the timing could not have been better either.
Time, price, everything. But very there's nice. A lot going on here, and if you guys need to catch up with the S&P story at least, or all the stories, just go back a couple of weeks. You can watch it forward, like almost like Netflix episodes, because
That's
the
true.
plot is always a freaking mystery, right? You know?
We never know what's next.
And
Not for sure.
Yeah, and the plot just keeps thickening.
Twisting and turning.
Yep, and a new episode gets written during the week, right? So
That's exactly right.
and so if you catch up, you can see how we got all the lines and all the levels and everything else. But just to do a quick catch up, we were looking at this 90 by 180 cycle coming in. Now this is calendar days. We also look at trading days. We also look at calendar days and also a solar movement and different degrees. And that's what these are when they have a degree sign next to it.
Mm-hmm.
And you have to kind of track everything to see which one has traction. That's just how it goes. And you'll see how, some people will prefer one over the other, but you really can't have a preference because we know they change, for different phases of the market. But a lot of the numbers that are calendar versus trading, some of the numbers match. So it's not a problem, but it's good to watch everything. Like, for example, here we have two lows, and the initial low, the reason I'm using that to get this 180 is because a lot of cycles coming from the highs expired there, but that doesn't necessarily mean the new cycle started there. So the new cycle could have started here, but I prefer to use the first one till it's proven that it's not working.
Right.
In this case, we did 90, 90 bars, trading bars, trading days up into a high. So for me, I figured, that's validation, right?
Yeah, for sure.
Compared to if you go off of here, then you wouldn't really catch the 90. Came towards the end of that. It's very short, but still. And the reason I bring it up is, we had 90 here. I mean, more than the time element, this is what tells me the lines or levels are working, right? When you have this kind of a stuckness and then you just break to the upside. So that kind of break we're expecting. And now that we passed it, it's a little bit past where like the window. Like, for example, here, if you look at this 90 that came up, it wasn't exactly there, but within that window, a high came in, right? And then we drifted lower.
And especially look at the price action after it too. It just kind of chopped. So it was
ridiculous.
it was making the turn. That's all.
And this low, you can see how, we spent almost 2 weeks just messing around there. And then you can see this low wasn't really easy. You can see how it came back, scared the bejesus out of everybody, and then it took
false
off,
break,
right?
yep, and then
false break. But you can see how many days it took to put that in. Now it's not always like that. We clean lows, clean highs like this, clean high, and then you get the ones that are a little bit more dramatic, So it's hard to say, how they come up, and we don't really care. We just want to know when they come in and just have a heads up so we know what to expect. So now that we're almost out of the window, unless something really dramatic happens early next week, what I will be doing next week is to move the square down to switch it up, and that would give us the 90 coming in right around the 22nd.
Oh, guess what else is happening around there, Barrie?
Well, exactly. I mean, this would be like epic, right? If it happens,
that's the solstice is the 21st.
Exactly. So that could line up in a really epic way.
Yep.
And there are other cycles that are lining up to that, so that's fine. The point is, we want to, we just want to make sure that we're aware of these things that are coming up, so we're not blindsided, right? That's the main point. Anyway, so let's go back to where we were. So next week I'll switch it up, and now you guys know there's something coming up next week. So last week we left it off that, and I said we really need to cover the get on top of the 90, and then we had this 43.25 to 70 area that could be kind of a buffer zone, but if we can get above 25, it'll start picking up momentum, and then we're going to start moving. So right about then we had the expiration, blah blah blah, and we just ran up perfectly. And once we cleared that little zone, it was all straight up. So this leaves us for next week. I would say, we're getting a little bit stretched. Stretched from where? Well, stretched from this leg here. And I'm seeing a 90-day, sort of almost a 90. Well, here, look at this.
It is. Yep. It's coming into a
Yeah,
90,
coming into a 90,
almost 90 up.
almost 90 up. It could be, we could end this on a 7/8. It's hard to say, but we don't have to speculate about these things. It's when we get it, it's very clean,
Mm-hmm.
so we don't have to, I don't think we have to sort of guess at that. And we have 3/4 of a square right here, right now.
Mm-hmm.
So that's well within the our frame. And then we have a 1/8, 7/8 going in towards the end of the square, end of the month.
Mm-hmm.
So all that to say, next week we're going to be just using our levels, and we'll go by that, because we do have this coming, but it's not critical. It's just kind of in the air, going by the low in October. 22nd's coming up, and so we can certainly pop up into that. But going back the low that I've been trusting so far,
and it's worked very well.
and it's worked okay. Yeah, it's worked just fine. I mean, it got us up to 106 months point, right? So
yeah,
good enough. So going forward, using the same square, same points, I'm going to put the quarter square. So now, let me clean this chart up a little bit. So we're up into quarter of the next square, and we did a clean breakthrough here. And all I can say is we just have to stay with the trend. This is not the time to be messing with the trend. We know there are some cycle counts coming up. That's fine. That's not a problem. We just want to make sure that we stay with the trend. And I'm just going to draw up this channel and see how it goes. Now, I used for daily, it would be perfectly normal to have a counter trend back down into 4,300 area.
Yeah,
right?
sitting on top of the 90 would be really bullish.
Exactly, right? Not only the 90 there, and we have this high over here. Not to mention all this foundation, right, that we put in through for almost a year, right? I mean,
yeah, it was a year. Yeah,
and then we broke out, so it's quite a bit below. So and to test that, a pullback would be just fine. Even we dip a little bit below that, that's okay. So for now, I would say watch we post a lot intraday, and if you guys want to follow us on Twitter, because we post a lot of stuff there. Well, I was going to go to the 30-minute chart, but we can look at this. I posted this today.
That was a brilliant one.
Yeah, well, it's good because we have this fork that I've been watching forever. Sometimes you have a chart, you throw a fork on there, and you just watch it to see how it works. And well, this is how you use them, right? You put them on late on the chart, and you watch it. And lo and behold, here we are. We came up and tapped this, and we're 90 degrees from that last low to this high. Now these are solar degrees, so that's something to take notice. Yeah,
definitely notice that. Yes,
and especially when this market just loves to do sort of vibrations of 30. So I mean, here going up into that final high, we did a 90, right? That was a 90. Here's a 90, and there's a bunch of 60s.
60s,
right? Yeah, that was really good trading. So and these were 40s. So once you find the right rhythm, it's very nice. And what you've noticed, the whole thing here is we haven't really seen a 90 lately. No. they've all been shorter. So this is another reason I posted it sort of, if you catch that, then we know there's a potential in here. And that's exactly why we want to, and we're 240 from this low, right? So 240, 90, these are all important numbers to watch. Yeah, you won't go wrong doing that. So that's that. But what I wanted to show was the 30-minute that we watch during the week. Here was Monday, the opening. We were looking. It pressed through, grounded through up through the 240. We used. It's the same square that I post, except this is the 120 instead of the 60. And we watch all these levels were important. We can see we broke out of here, got on top of this line, came back for support, came back for support, higher low, broke the trend line here, and we're off to the races. And the next resistance was at 360, which is right there, and it was on 44, 44.80, let's say. And you can see how we kind of got tired right at that point, and we sold off today. We started recording right about the close. So, and today wasn't an up day, and we weren't buying up in here because we knew we were up against resistance. So that's that. Coming back, I know I said the reason I jumped to this is we looked at the 4,300 on the daily chart and said, well, we could come all the way down here and that would be a perfectly normal correction on the daily chart. But on the 30, if you're following the shorter time frames, it's a lot easier because you get these early signals to, kind of watch what's going on and how, if you're losing momentum or not. So for example,
that is a good signal right there.
Yeah, well, I mean, look, if you're trading, knowing there's, we're at one of these key levels, it's a huge thing instead of trying to struggle with this, right?
Yeah.
So anyway, just that, under 44.80 or so, we're it's weak. We have support around 44.50. So I think next week, if you guys are really watching this, 44.50 basis the 30-minute would be like the sort of the early, so the canary, and the second level canary would be this 44.20 area. So we really have to hold, 44.18, middle of this box here. It's 44.7 to 40, about 14-point box. And if we hold in here on a correction, market is very strong, and I wouldn't be fighting it at all. But up until we get to, like, for example, if we take out 44.50, I would expect this to be the next support. If that goes, then probably 4,300 would be next. As far as upside goes, you can play off the 44.50. You can play off these levels down here. But you really want to remember that we do have resistance here. Until it gets above that, there's a little bit of, it's a little bit, let's just say, risky.
Make sure your risk reward is favorable. That's for sure.
Exactly. And I do have a box up here. We could do a quick flush next week and get up into this 45, 45.5 to 45.15 area is really big time resistance. So we're not too far from that, just so you know. So anyway, that's the 30-minute. Let's get back to our business at hand.
The weekly.
So that gives you a zoomed in version to and we do that when we get it close to these critical times, like the 90 you saw, and all the cycles that are kind of bunching up. And when they bunch up like that from different points of view, let's say different ways of measuring, then you really have to watch the levels, because that's the thing that'll save you. And the other thing is, when you have a steep trend line like this, it's really, it's rare that it holds for a long time. So we really have to start watching the steep trend lines for some kind of a break. That's the other thing. And you have another trend line from here to here. I'm just going through these because just to give some educational value. And if you guys are doing this stuff, we get a lot of questions. So it's the simple things that helps you develop your, well, let's just say chart awareness, situational awareness, right? So if you watch these two, I drew these really tight. Why? Because we're in a very narrow window here with a few different cycles. So if these breaks, that would be the first sign. Now, if we bounce off of these, we're just really going to go. So keep an eye out for that too. For now, everything's okay near the highs, other than what we talked about. So anything you want to add, Ben?
No, just corroborating what you're saying. It's got to keep rising at this speed, or else the trend lines are going to automatically break with time.
Yeah, and you want to watch all of those,
and that's what makes it difficult.
And
to keep this ascent.
Exactly. And trend lines are, I don't know how many people still use these, but if you look at just the last couple of years, if you look at this really steep move, you can see how, as soon as the steep trend line broke, that was it right here. Same story. Right here.
Same story.
Here, it's the same thing. So, they help, and we use them to sort of help gauge the momentum. And I think they work a lot better than indicators once you get used to them.
True.
Yep. All right, let's take a quick look at the weekly. You didn't see this line there last week, right, Ben?
Mm-mm.
You know where I got that?
Where?
Back here.
Wow, nice. Very nice.
Right? I was thinking, well, why couldn't we have a nice big counter trend on a weekly basis? That would be a hell of a thing if that happens, right?
Right. And so
And
you measured it from 2007 to 2008.
yeah, and I just brought it here. No, didn't change anything.
Oh, how great is that?
And it's super simple. None of this is tricky.
Right.
And the only people that are going to see it is people that watch it this far. Kind of funny, right?
It's a little Easter egg for people that
Yeah.
watch the video.
And the thing is, this one again, it's another. You just collect your data points. This is another data point you want to just keep an eye on because we're not a mile from it. We're like practically kissed it,
Yep.
and that's important to know. Why? Because we had that 90-degree movement that we saw on the fork that we've been following for years, and then we have all these tiny cycles that are lining up, and we have some daily cycles coming in. Yeah, we're moving higher. That's great. That's fine. But we want to know, these little windows. So right now it's okay, but just keep an eye on it. The break was from here on up, right? That was the clean.
Yep.
This was the one to really watch, and that's the one we caught. And the rest of it's like sort of the bonus. So basis weekly is strictly going with there's something else that's happening. Look at this. So I've been going off that low in 2009, but if we take it into, bring it up to the current levels, we're coming up on 36,
square. Yeah.
36 weeks. And this is also a big deal. And again, and the reason we look at through all these different lenses is to catch things that we might miss otherwise.
Right.
And you can see here that we're right at 36 and 7/8, not too far away.
Nope.
And if I were to put a price, it's right around 45.20, let's just say, right?
Mm-hmm.
And if you remember the numbers I had on the daily and the half hour, those were, remember I said 45.05 to 15.
Yeah.
So it's in that neighborhood, right?
In the range. Yep.
And the range is okay because we're not trying to catch the high tick. Those are the younger days, right? But we're just trying to confirm the corner so we can.
That's it. That's the key thing.
Trade the rest of it. So in the meantime, we do have a good channel. I mean, channel means, I keep mentioning it, is we could certainly pull back to it and it'll be just fine, right?
Mm-hmm.
But we also have a potential for a high to high, some kind of a shenanigans. We do have some geometry there that I really respect, even if there's nothing else going on.
Mm-hmm.
So we'll be watching that. And so
it's all these little data points just help you and help me. They just help us really try and figure out, okay, what are the odds that we have a corner? Well, it's not going to give us 100% certainty. We're not going to say, oh, sell the top, let's go, we're going short, all in. That's not the way it works. But as you mount the evidence up and then look at it, you're like, the risk reward's not too bad right here.
Yeah, it's all probabilities, and you don't want to get like drowning in data either. And that's why we look at all that, but we funnel it down to levels. We funnel it down to really, chewable bites, right?
Mm-hmm.
And we take it from there. So for now, yeah, it's fine. Watch the trend lines, watch the levels. We could correct. That's why I don't have anything under it other than what we talked about on the 30-minute segment. So that's it for that. Let's move on to bonds. Looky there. What do you know? Remember we put these equilibrium lines?
Yeah.
Way back
beautiful.
when. And we came and touched it on Thursday.
Yep.
And bounced off of it. So now we're really, it's make or break. Now we know if it breaks the line, we're probably going to go lower, like we've been
looking for. Yeah.
Been looking for. So we'll see how that goes. But now you can see the same numbers from last week. Nothing's really changed. This 128, 129 area is resistance, 50% of the square. And unless we break the trend line, you guys could probably replicate that. Basically, we shouldn't really take out Thursday low. and that low would be 2126. It's 126.08, but let's just say 128. So if he takes it out, we know we took out that equilibrium line.
And if you look at it too, Barry, it's like triangulating, waiting for the next break lower, you know?
Totally. I mean, this is the bottom of the triangle is right there,
Yeah.
right? A little
Yep.
bit different slope, but we have a triangle here.
Yep.
So we'll just watch that. And going to the weekly, we have an expanding triangle.
hmm
And it's not looking that, that healthy. So let's just draw that line in. Again, if we take out Thursday low, it breaks this one too. So it's all there.
Yep.
And to the upside, we have that overhead 129. So we'll just leave it at that. Not much action till we start breaking again. So for now, we'll just watch it.
But we're only a couple points away from breaking both weekly and monthly support. So
yeah, well, that's the other thing. Yeah,
yeah,
yeah.
As soon as that breaks, we could have a nice run.
Yeah, I shouldn't probably make it that casual, but that's once it breaks, we'll have.
Yeah, it's casual because it's stuck in a triangle still.
Yeah.
It has to break first.
So we
jump on it. Yep.
And here we have crude daily, and what's happening here is nothing. We're churning in the same little boxy area that we drew up last week, which is right there, and you can see the week was pretty much entirely contained within that. So it's another test of the 73.50 next week. We'll see how that goes. It's just, I mean, all signs are it's still sideways. But what we're not forgetting is these were huge lows that came in.
And they're holding.
So we're watching patiently to see, when it breaks. What we know is once
exactly
it leave the zone, it's going to start moving. And that's when you make the money. So you want to treat these areas like, like the runaway. You're watching the plane.
It's a lot like in the commodity side, like cotton, cotton's been going sideways for 6 months, with a low holding going sideways.
Yeah. These long runaways give very long flights. So
correct.
That's the thing. So anyway, so for crude, again, 73.50, it looks like if we get above 73.50, we're looking for some strength. Up until then, it's probably going to be churning in here. Not much to do. It's time to save money.
Right.
And you can see the weekly, same shenanigans. As soon as we talked about this 50%, the 74, 73.50, 74 area, 74 basis, the weekly a while back, months back. And we wanted to see a quick break and pop back on top of it. If we didn't, then we were looking for sort of a consolidation in here. That's exactly what we're getting.
Let's wait for it to break.
And yeah, basically waiting for it to break. Moving on to gold. Well, we hit our 1940 level Thursday. And
brilliant. And look at the bounce off of that.
But had a good bounce and right into this 1984.
Stuck.
So you guys, not much. But, the fact that, what we want to watch is, if you want to study charts, this, so this is what's really happening, right?
Mm-hmm.
It's on a weak footing. And the strength will only come once we get on top of 1984. And we have some overhead to deal with. So it goes a little soft here, even though we bounced off 1940. It's looking a little weak. At this point, the correction might not be done.
Boy, a false break clean out to the downside would be nice, wouldn't it?
Yeah, well, I think it might be, be careful what we ask for, right?
Yeah, true.
It's probably gonna happen soon. And the other, we were watching it. So this is why we draw trend lines, right? So look, we broke the weekly trend line. Okay, now we know, and that's why. And we couldn't take out the daily resistance, the 90-degree level above. So see how it all adds up. Now we know to leave this thing alone for now.
Mm-hmm.
So that's that. That's a 90 level I was talking about. Moving on to copper. Copper
had a little giddy up this week, didn't
it? The little train that could,
yeah.
I was
that
surprised.
Low is good. That low that we called is again, it's held for the last 2
This
3
low
weeks.
is definitely good. All the lows have been good. And so here, we ran up a quarter of the square and stalled out a little bit. And if you go from the high, we came down, we scored out here,
Yep.
45 by 90, so that's okay. And from the low last July, we came down and up into 225 in time, and
Yeah.
that was okay. Well, not just okay, it actually came exactly to our price
Yeah.
at
It's good.
54. So here I mean, for copper, this is a pretty decent run with all the news, negative news, about slowing down and recessions and
Sure.
everything else.
Sure.
This is pretty impressive. So we'll watch it for now. If we've been playing the long side, I'm a little cautious now. I'm waiting to see if any kind of a correction or pullback holds above the 380 area, the 50% line. Let's just say, 380, 3.80 would be a good area to watch. So if you're above that, let's let it come back a couple of days and see what kind of a counter trend we get. If it's a quick one, 1 or 2 days in reverse, then I think we have a lot more to go.
Agreed.
But if the counter trend is a little bit longer, then it's probably going to be maybe a sideways correction.
Mhm.
Then we move on to weekly copper. And this forky, guys, we've had it for months and months, right? And well, we had it ever since we started doing copper
Yeah.
as part of the show. Anyway, we tapped it here and we tapped it again a couple of weeks ago, rallied up. I'm looking, I mean, the overhead is right in here. So, we get into 398, 4. This is the area you got to really watch. So we're, like I said on the daily, if you played the long side, you got to be a little bit cautious here because we're coming into some overhead, some resistance. So it wouldn't surprise me if we get inside week or some kind of a little bit of a correction next week. So be careful with copper. Anything you want to add to copper?
No, just the lows are looking good. It acted well. Let's see what the pullbacks look like.
Right. And let's move on to the dollar. We had support at this 50% line. We were looking for a rally. We ran up and we're looking for a little bit of a counter trend. Not this steep, but
Right.
we were expect this would be support. And now we came exactly back into that.
Yeah. Top of the box.
If I were to extend this box, guys can see in real time
Yep.
exactly where it came to. And well, that's support.
Yes, it is.
So I would say if we respect this line, all this, everything below the floor, I think we can expect a stronger move out of here. But if you get into the box again, I think we're going to have another, long-term consolidation happening here. So be careful if we drop below today's low.
Mm-hmm.
Okay, I think that's kind of all we need for this week for the dollar. Moving on to the weekly dollar. This is kind of in no man's land in the sense that we have the 90 here, which is support. Okay, great. The next resistance would be in the 50% square, which is around 106, 106. And in between, really, basis the weekly chart, we can certainly consolidate in here. We got plenty of room to run. So you have to look at your lower time frames. Here, I think because the dollar did put in a good low, we can expect it to sort of hang around, in this area. It's really not much to really add to that.
The only thing on the weekly is you watch and see if you can get a reversal to put in a higher low.
Yeah, I mean, that would be good. And if we can stop around this 1/8 line, that would be even better. So we'll see. And we do have that. I moved that trend line now. So we'll have that trend line in place. We'll see how all that works out.
Good.
Next, we move on to the euro. Well, we pushed
right into resistance.
right into the same box. It's kind of like the opposite box.
Yep.
So the box that we would support, we saw support in the dollar is resistance here. And of course, here's 144 degree. So this is really resistance, just like as much as it is for the support for the dollar. So we'll see. Like I said, if we're under the box for the euro, we can expect it to weaken and weaker conditions. If for some reason we get on top of that square of 144, which is like 109.6, then basically if we get on top of this week's high, I would expect it to be in a firmer condition, probably consolidate up here. But either way, it's just weak, and this looks like some kind of a squeezy kind of a run. So that's all I have to add for the euro. Do you have anything to add?
No, I think that's a
Move on
good
to our
synopsis.
weekly.
We're right at that that
Mhm.
major resistance.
So this basis the weekly, this is perfect. You know, we ran up into the high, came back, and we have a 2-bar counter trend. So if we get weak next week, keep in mind we don't repeat. I don't normally repeat every week the same thing, but if this weekly reverses, we could have a hell of a downside. So keep an eye on
Yep.
these. When we run up on new legs, you always want to watch that first counter trend, and here we have a chance to do that. So watch this next week, right, Ben?
Agreed.
Mm-hmm. Just
That's a
like
good
it
one.
happened here, the first counter trend was that bar.
Hmm.
Then we ran up 2 weeks. Here's the next counter trend, and you saw what happened. So that's
Yep.
how you want to watch them. Well, that's all I got. Let me put it back to you.
Great review.
Thanks. Thanks, Ben.
Nice work on the S&P because that was a lot of work that went into that.
Yeah, I wonder if we covered too much, but hopefully nobody got bored. Leave us your comments. If you want more or less on different markets, and we'll try to do that. And also, if you like our work, please subscribe, like, and share our work with others that might benefit. Help us grow the channel. And let me put it back to you, Ben. Well, Ben, it's hugging the trend line. It broke out of the square. Nice pullback, counter trend before we ran up. Now, what? Almost at the upper square.
Yeah, almost made the top of the next square.
I'll tell you what, though, April low to this high, beautiful move.
Yeah, very nice.
Look
Now
at all the check back. It checked back on every time we broke out. Check back, check back, check back.
yeah, it's very nice.
Mm-hmm.
So the key things here are when I look at the commodities, we're doing NQs here, but when I look at commodities, we try and find this spot, right? We try and find a good low
Right.
and then track it coming out and then start knowing, okay, we got a good low, we know what direction we have to trade. This is the thing you see when you catch a good corner, right? You see this steepening of the trend lines as momentum starts kicking in. The problem, now we can even draw another one here. As you get near the highs, it goes vertical. The momentum really, really kicks in, and it's hard to sustain that, right? You start running into those rate of change issues, right? In order to keep going up at this pace, it's got to basically go straight up. So now we got to watch these trend lines and say, okay, when they break, it tells you momentum is no longer with you.
Mm-hmm.
We also have the other tool we have is the levels, right? Right now, here's the big level for the bulls. Got to hold this level because if you lose this level, you open up this level.
Mm-hmm.
And if you lose that level, it's down to this level. And this is a really important one because look where it sits on those August of last year's highs.
Right.
So does it mean it's going to crash next week and all this? Not in any way, shape, or form. Could that happen? Of course. But does it mean it's highly probable? We have no idea. Right. You got to see a reversal. You got to start seeing what I've been saying on Twitter all week is, you got to, if you want to get bearish, you got to see support fail, resistance hold. And in the Nasdaq and in the S&P, as Barrie showed, we're seeing the opposite, right? Support's holding, resistance is falling. Like here, we get through, sit on top, now it holds, go to the next level. Here, you can see the breakout. Where was the low? Right on the half square. So next week, let's say if you have a bearish tilt or you say you want to sell it, 14,340 has got to go right here. I'm sorry, it's actually higher now. It's 14,955 is the half square.
Mm-hmm.
So that's the new level to watch. 14,955 on the upside, it's 15,570. So until it starts, giving way on the downside, these levels, you either, if you're in it, you stay in it. If you're trying to trade it long, you better keep a tight leash on it because we are long in the tooth from this low in let's see, in the December, January lows in here, we're 144 up, which is a significant number.
Mm-hmm.
144 in price. And if you take the December low right here, it's 144 by 120, which is
Right.
a decent square. So could that top it out? Absolutely. Does that have to top it out? Nope, not necessarily. We have to watch price and see what happens. Anything else to add on this?
No, I think you covered it, and we covered the S&P. I think we're good.
Yeah.
Just that this is also coming up on 180, same low coming up from October lows. We're coming up on 180 days next week. So we'll have to watch it. We'll cover that next week. That'll be on the 21st, 22nd. So that's something to keep an eye on.
It's a very important time to watch.
Mm-hmm.
As we flip over to the commodities, Barrie reviewed crude. Cotton is the same as crude. It's sort of going sideways. Sugar's in the middle of a high consolidation. Cocoa continues to be a star and pushing higher. Copper, Barrie covered very well. I think that looks bullish. We just want to watch the pullback there. Gold and silver are trying to finish up their correction. You got to let that play out a little more. For us, we're going to cover the corn, soybeans, and wheat, coffee, and nat gas. So let's go to the grains, who were absolutely stellar performers this week. This is what you like to see when you're looking for a low, right? Last week we highlighted this low. We showed on higher time frames, weekly, monthly, how there was good support. The low came in, squares at the low, and then this week we get this kind of move out. Also, we had news this week, and every time the news comes out, followers will throw it at me and say, "Oh, look at this news on the grains, or look at this news on corn." The first, if you get good at this and you really watch the charts closely, you see it in the patterns first, and then the news announcements come. And I mean, it's basically we're watching and looking at the footprints of these people that are in the know, who have size, who buy. And this bar here, and then the subsequent action was telling us and telling me that, hey, somebody with deep pockets wants this, and they bought it. And then, of course, we saw the last 2 days we've got big moves higher. So we've cleared the first hurdle, which is we broke out of this down channel, and we had a full bar above this half square. So what are we going to watch next week? Next week, we're going to watch to see how does it deal with the full square if we make it up here, and if we get a pullback, where does this low come in? Is it 1 or 2 day pullback? Very bullish. Is it sloppy? Then we got to say, okay, we got some more work to do in here. But the price action the last 2 days really talked about somebody that wanted to own this thing for some reason. There was big money coming into this commodity and into the grain space. Weekly support is at 675, which would be right around there. So as you can see, we're even above weekly support right now. So the chart looks good. Higher confidence than we had last week that this low is good. Now we just want to see how the pattern plays out. If you're in it, enjoy the ride. If you're not, remember, it's early. We're waiting. We can look for any kind of pullbacks now and watch the character of those pullbacks. And based on that, you can get involved in this commodity. Anything else to add here on wheat, Barrie? This is the laggard, by the way, of all three.
No, you covered it perfectly. That's exactly what you have to do.
Okay. Let's go to corn. Here's corn. This has been the leader. And the only thing I'll point out in corn, obviously we've got a nice move up off the low. So the confidence that this low is good and this was a false break is much higher now than when we first tried to enter, because we had to see, okay, what's going to happen. What I want to point out is look at this bar here, right? We went up, pulled back a couple days, back up, chopped around, pushed up, and then look at that pullback. A 1 day pullback right into a full square, reverses the next day, closes on the high of the last 2 days. That's textbook, right?
Yep.
That's how bull markets act. 1 day pullback, immediate reversal, push to new high. It's not sitting around letting everybody get in. It's like boom, boom, gone. So the next big spot, and it's a huge spot, not only because we got geometry here in the half square, it's around 655, 660, 656. We got the downtrend line from the highs last April. Break that, and this is the leader, right? It's obviously closest. You break that, it's bull market time. The correction's over and we're going north again. So corn looks really good. Again, watch the pullbacks. It may give you a 1 day or a 2 day pullback. Watch for the higher lows. Don't be surprised if we get a pullback, right? Because this is early in the move. Again, this low came in May 18th, and we're sitting here on June 16th. So when the markets run, they run, right? Look back here. This is what we hopefully are catching. And see, look at that. After that first run, look at that. We had almost a full half square pullback. So if we pull back a half square, it should bring us right back in here, which would be ideal. Anything else to add here on corn, Barrie?
No, you covered everything. I mean, once it's moving, there isn't a whole lot to do other than you watch the counter trends. So now we're good. We waited all this time for the low to come in. We talked about the low for, weeks.
Yeah.
And now it's going. So let's ride it.
That's it. All right, let's go to beans. Beans was really strong this week. Let's see. Didn't give you much of a chance when it goes, does it?
No, you got to be on them.
1 day pullback, inside day, boom.
Mm-hmm.
But again, this is how you identify and sort of scope out a corner and say, okay, this is a corner. The big decision this week was, here's Tuesday, Wednesday, where we were dancing around this full square.
Mm-hmm.
And then Thursday, Friday, big moves, close on the high. So again, the confidence that we have a good low in place is really strong here. Really high confidence. Coming up on the downtrend line, just like corn from those highs last June, the Russian invasion highs. So beans looks good. Again, I don't know what fundamentals are going on, whether it's drought or floods or what, but something is telling you that there's a supply-demand imbalance here, and supply is not going to be able to meet demand because we have a bottom put in, and now we're moving out of that bottom with speed. So the grains all look good. As Barrie was just saying, we've sort of triangulated these lows, found the lows. Now it's just we know the direction. Now we're just looking for pullbacks to get in if you already don't have a position. The only thing I would be looking at is there is some weekly resistance about a little over 1500, like 1508. So up around this 5/8, right up here. We might run into some resistance there. Monthly resistance is not until 660. Let's see, where is it? Monthly resistance is 1564. So it's up around here, up around the full square. So we got room to run on the bigger time frames. Enjoy the ride. That's the message. Anything else to add here on beans?
No, it's the same. We wait for the counter trends and trade it.
Okay.
Yep.
Let's run and jump now to some coffee. This is one that's almost ready, but we got to wait for the move.
It's brewing, Ben. It's brewing.
It is. Good one. It's brewing. That's a good point. We identified this low in early January, tracked it into the low, and coming out, we sort of completed a first leg up, up here. And now we've been sort of in this drifting correction, and the triangle's getting tighter. The break's going to be coming soon. So what am I looking for here? Next week, I think a close, we get a close over this half square, call it, 189.5. It breaks us out of the triangle and it gets us above the half square. That's going to be the entry here for coffee. If instead we chop around and we break here, it just means this whole consolidation is not finished yet. The key spot I want to see it hold, if we do go lower, is the full square, which is around 167. So this is on the radar because of this triangle that's forming, and we're getting into the apex. So it's going to be forced out of here probably at some point next week. And if the pattern, I'm reading the pattern correctly, and we've nailed this low, odds favor that the break will be to the upside. So we wait for that break and then trade it. Anything to add, Barrie? I know you look at these triangles all the time. Anything you're seeing that would be a fly in the ointment here?
Well, it's the patience would be the fly. So we got we just have to be patient through this, and because just waiting a couple of days for you to confirm the break is worth it, because we're gonna have weeks and weeks of a run. So
yeah. And remember, we're trying to catch the fast move, right? Here's your first move, here's the second move, and the fast move is the third one. So we got a possibility of catching a third here.
Right.
And that's why we're, I'm putting it up, I'm highlighting it, even though you can't buy it today, it's not ready. We're in the middle of this mess, but you got to watch it, because once it goes, it goes. All right, lastly, let's end up on another one that we've been watching and tracking for quite some time. And looks like it might be ready here. Old nat gas. This thing moves. Everybody knows, we've talked about it. When it moves, it moves. We've been tracking this thing into the lows, noting on the weekly show every few weeks how, hey, we got a low, little false break action here because we made a new low but couldn't hold it. And then we've been putting in a series of higher lows. And then for some reason, the last few days, this thing is perked up and turned tail higher. If you remember the pattern, I showed in the NASDAQ, where you have a flat angle on the low, and then the next low gives you a little bit of a steeper angle, and then the momentum starts kicking in and the trend lines start getting steeper. This looks like that might be starting here in this market. Now, what do we need to do to solidify that? We need to take out this high right here, and we need to take out this full square. And the full square is at about 282. So to me, that's the key number. We get to it and through it, then it opens up the downtrend line and the top of the square around $4. And in that gas, that can happen quickly. The other important thing that you don't see on this chart, but I'll show on the weekly, is why we're stopping right here. We made highs here several times, as you can see. And we got this half square. Call it 266, 267. So pushing through that on this higher time frame will open up, I think a pretty quick move up to that 282, which is the full square. So the steepening here, the action the last few days tell me keep an eye on nat gas. It's maybe sooner rather than later when we see a big move. Anything else you want to add here, Barrie, on nat gas?
No, you did a good cover. Yeah, no, we're good. I think if we take out this 265 level, like I said last week, if we can get on top of that, we can probably start seeing momentum pick up.
Yeah,
your 265.
Yeah, your 265 is right where my like I said, I was 267 was the weekly level. So it's right in here.
Yeah.
Right there.
We're right there.
Right there. Yeah. That's why I say once we clear that, you get rid of resistance on a higher time frame, these lower time frames can fly. So the daily could really, really move. So that's it from the commodity side. The only other thing I wanted to talk about, Barrie, and maybe you could mention it for a second, because I was thinking about it when you were doing your chart work on the S&P. Talk about, the art versus the science in trading, because a lot of what you were doing was not exact, right? You were showing how I got to try this low, or I got to try that low. I got to try this square, or I try that square. And I think that's the art that a lot of people get frustrated with when things don't show up exact on their charts, or they don't get an exact 90, or they don't get an exact 144. Can you talk a second about that before we sign off? Because I think it's important.
Sure. You want to throw me the screen?
Yeah. I think today you gave a great example of that as you went through the chart.
Well, it's something that I had to get through. It took long time to figure that out, because when you're learning cycles, and especially, if you're taking geometry and counts, and especially the GAN side of the equation, where we are really sort of taught to look for exact day, plus or minus 1 day, right?
Mm-hmm.
At least that's how I was taught. And
And the exact number, like you need a
yeah,
90
exact, to
or a
the tick,
60 or a 45.
and to the tick, right? Exactly.
Yeah. Yeah. Like if you're doing ABCs, it's got to be right to the number.
Mm-hmm. And well, those I mean, the thing to remember is all of those things fall in some kind of a sort of a bell-shaped graph, right? So you can have some that are going to hit perfectly, some that are plus or minus 1 day, some are going to be a little bit further out. So you have to always imagine like a bell curve being the overall plot. And if you think in terms of that, then you're going to have some are exact, some are a little bit off, and majority are going to be, a couple of days here and there. And the second thing is you need to make sure that what are you trading? Like, what's your approach to the market? So depending on your system and whatnot. So if your approach is to catch the corners, then obviously it's a higher risk. Then you tend to start thinking like that's the way to do it. If you can't catch a corner, then you failed, or you're going to miss, or there's all kinds of risk coming in. When it's really the other way around, if you wait for the low or a high to get established, then your risk is actually lower.
Yep.
Not higher. It's higher when you're trying to catch highs or lows, because is it this one? Is it that one? Is it the next one? Right. And like right now in the S&P, there's like, is it this one, or is it here? Is it there? And the point is, we don't really care. What we want to know is, like, when these lows came in and we cleared above the 50%, we knew, well, now it's positive. Now we're going to look for a run up.
So, right. And that's the irony, is you pay a higher price. Let's say you're being bullish, like the point you just pointed to. You pay a higher price, but you're actually taking less risk.
Yeah. Plus, it doesn't matter what you pay if it's what matters is profit, right? Risk and profit.
Yeah,
so
that's right.
If the odds are in your favor and the numbers in your favor, it really doesn't matter what you're paying. It's really, what are you making out of it? And well, so it's combining, as far as the science art of it goes, it's really the art, I would say, is really about combining, how you combine your technical data. That's the art. It's like how you combine the ingredients for a recipe.
Right. Right.
And like I've noticed, even though I'm not really good at Lisk, I'm a little bit abstract when it comes to the way I look at things.
Right.
And you have to, and when you're watching the different components, let's say the calendar day chart, then the trading day chart, and the degree movements and the different squares, what comes out of it is you kind of see what the market is having, where the market is having traction. So then you just focus on that. And when you see the market is losing traction there, it's moving on to something else, then you lean on that until that traction gets away. So it's really like jumping from one iceberg to another, in a way, right?
Mm-hmm.
And you just want to line it up. When you're certain, you jump onto the next one. When you're certain, you jump onto the next one. Meaning, when I say jumping from one to the other, I'm saying how you combine the ingredients, right?
Mm-hmm.
So if it's a calendar day that's working, well, you work with that, but you keep an eye on the others. And if it's a trading day chart that's working from a certain low, you work with that. Like right now, I'm working with this low, but I'm keeping an eye on that low, right?
Right.
And I'm also keeping an eye on this, because if we go into a 90-day blow off, it would have to start from here, and there would be a first 90. You know what I mean?
Yeah.
So those are you kind of forward pace, so you know what's coming up, and sort of how to mix it. But the thing is, I was telling my son the other day, like, you can read about it and make notes, but it really doesn't come in till you actually start doing it. You have to do
100% agree. 100% agree.
Right, Ben? You know it, and you spend a lot of time on charts. You have to spend time on the charts. That 10,000 hour thing is probably true.
Yeah. And what's fascinating about it, Barrie, is when I hit that point where, I don't know if it was 10,000 hours or 20,000 hours or whatever it was, you start seeing the beauty in the fact that, just like with this low, it's hidden in plain sight, right? Because if you're rigid about saying, well, I've got to take it from the low. You missed all that other information,
Mm-hmm.
which was great information, right? The high at the 90, the recent high at the 180. I mean, just beautiful stuff like that.
Mm-hmm. Mm-hmm.
And by being open and playing around with the charts and then seeing this information and listening to what it's telling you, it opens your eyes and your mind to all these possibilities that would otherwise be hidden.
And we have these really sort of not to say blinders, but sort of limitations in how we see things. So if we approach it with, I got to catch the corner, you're not going to see everything else. And so you really have to be clear. What am I doing? Yeah, it's a market. You can do anything. There are a million things you can do. But what am I doing? So, that approach of what do I want out of the market will help you figure out how to see it correctly. Because seeing it correctly is everything, depending on your requirements, right? It's sort of like in the army or when they're at war, you have a problem, you have to develop a solution. So if you can't define the problem correctly, then you're not going to have a proper solution. So it's kind of like that. And the art of it is in developing the solution, right? Mm-hmm. So you have all these technical things like numbers and cycles and levels, and then combining all of that would be the art. And that's the thing that takes time, and you can't read a book and sort of jump into it and do it, or take a weekend course and now you can trade. It's just
it's working with the charts for a long time, and you get that.
It takes
feel.
time and dedication, and it takes some discipline. I hate to say it,
right?
But the rewards are there. So those who choose to trade the markets, I think they have the DNA, so to speak, and they understand risk, and they understand what's required. And once you have those qualities in you, then the approach is really not that complicated. What complicates it is our inability to probably define exactly what's happening.
That's right.
Like what do I want out of the market? That if you can define that correctly, then the rest of it is a lot easier. But if you're jumping around like a lot of people do when they're new, I want to try this, I want to try that, I just want, if I have 15 indicators, that's probably going to be better, or make it very complicated. So actually, I think one of the reasons I keep it so simple is to show you don't need a lot of fancy stuff to trade.
No.
In this day and age, all the computing power, both of us are sitting here with just lines on our chart, so
right.
I mean, it's kind of funny. And for me, it's because I started with hand charts, and I used to print my own charts and draw all these things by hand. And so for me, it's probably I didn't have a choice. It's normal, right? So,
right.
But it's simple, and it allows your mind to do most of the work like it's supposed to, instead of really leaning on a lot of other nothing wrong with indicators. It's just, all indicators have a purpose, and if it helps solve your sort of the equation, like what you want to get out of the market, then fine, include as many as you need, or that's not an issue. I think the art and the technical is really how you combine it. I think the combining is the secret sauce. How much of that do you rely on? And because the market is never consistent, it's consistent through geometry and some of the things that we look at, but it's not consistent if you don't have anything. If I blank out everything on the chart here, you'll only see black lines, and it could do anything the next day, right? It's like flipping a coin. So that's what you're looking at. That's where the problem is. So you have to start framing it. You have to start framing it so you cut it down to a size that you can handle and that you can trade. So it's a little bit complicated. Gosh, maybe we should do a series on it one day.
Yeah, maybe. Anyway, I appreciate you going into that, because I think that
makes sense. Did that kind of answer the question?
Yeah, because it is an art, right? It's using your tools to decipher this puzzle, right? And see, how can I create probabilities that let me see, one thing's more likely to happen than another. And that's all we're trying to do.
Mm-hmm.
Where are you going to be focused this week, Barrie? I'm going to be watching the solstice date, see what happens in different markets, see if we have any cycles that fire off, coming on with that important natural cycle of the summer solstice.
Mm-hmm.
I'll be watching nat gas to see if we accelerate. I'll be watching coffee for the breakout.
Mm-hmm.
The grains to see if if we're going to blow off short term, or we get a nice pullback that can let us add to positions. And of course the S&P to see if and NASDAQ see if we did get a turn. Where are you focused this week?
Pretty not well. The grains are so far they're okay. I'm watching those obviously because this is the time.
Mm-hmm.
And other than that, the ES watching it very closely, and the dollar a little bit, and of course crude. Crude I've been watching. I watch it every week because you really got to keep an eye on it if you want to catch it out of the gate.
Agreed.
And so crude very closely. Other than that, yeah, that's kind of a gold and stuff. Gold bonds, I'm kind of not. It's not a make or break deal at this point. We have levels, and if we penetrate them, we'll have to deal with some kind of a plan. But for now, it's okay. There's nothing much going on.
Agreed. Well,
But
listen,
the ES is probably the top of the list.
I'm with you. Everybody have a great week. Rest up because the activity this coming week should be off the charts. I think there's going to be a lot of markets moving a lot. I mean, the preview was this week, with the grains and the ES and NQs, and I think we're kicking off a busy and not boring summer. So rest up, everybody. Great job, Barrie, and we'll talk next week.
Thanks, Ben. Good job. And everybody have a good week. We'll see you next week.
Thanks.
Bye.